What's good, YouTube? This is Tahmid back with another video. Now I know I haven't posted in a while, so here I am, and if you've been following this channel and hopefully you're a subscriber, and if you aren't, smash that subscribe button right now. You'll know that I post a lot about financial issues and things related to finance. So we're back here again, another video on the Canadian real estate market. Now, the Canadian real estate market in the last 12 months, or rather let's say 2021, has been red hot. And despite what many so-called experts thought, the market has been going in the opposite direction. It hasn't been going down, rather it has been skyrocketing up. Now, as much as it boggles the mind to think that the real estate market is defying gravity amidst a global pandemic where people are getting sick, people are losing their job, people are dying for God's sake, that the real estate market just keeps climbing on up. Today, we're gonna get to the real talk on the supply and demand, so really the market issues that have created this red hot real estate market. And it's a timely topic, our federal election is going on and a lot of people are talking about affordability. There's a lot of young people, my peers, myself included, that are worried about affordability, particularly the issue of never being able to own a home or any sort of real estate for that matter. So I think the number one issue is the pandemic itself. The pandemic has made many more things more expensive than they were before. To talk about real estate in particular, it falls under something called financial assets, which have really gone up, whether it be stocks or whether it be bonds or real estate itself. And the big reason behind that is no matter how hot or how high the prices go, central banks are keeping interest rates at historical lows. And at low interest rates, there's a lot of access to financial capital. People can borrow, businesses and people, even governments can borrow money at a very cheap rate. And that incentivizes risk-taking and crazy spending behaviors like the ones we're seeing with Canadian real estate. And remember, part of the reason they're keeping interest rates so low is to hype up or to bolster the demand that's out there. Also, another reason, number two, is that of immigration. And some of you might think that international travel is halted, immigration is not an issue in terms of creating demand. Well, in 2020, Canada still brought in about 250,000 immigrants, which is slightly lower than the year before, 2019, pre-pandemic, but 250,000 is around the average this decade. And I know it's a big election issue right now and whatnot, but the current government has plans to bring in about 300,000 or 400,000 immigrants in the coming year when international travel eases up. Obviously, pre-migration immigrants come from all types of financial situations and backgrounds. We have to keep in mind that the majority of immigrants to Canada are economic immigrants, so we assume that they have some sort of financial stability coming in, or they will be able to get good jobs or income somewhere down the road, and then be able to, own a home with the white picket fence, some city in Canada, most likely in the metropolitan areas, which attracts most of the immigrant traffic anyways. And because of this, geographic clustering of immigrants and these economic immigrants in these particular areas where the jobs are, this keeps the demand cycle going. This is why you have such crazy rises, well, at least in the past, in the Greater Vancouver, Greater Montreal, and the Greater Toronto areas. Now, coming back to the pandemic, one of the crazy things it has done is it has spread some of the fire and red hot pricing out more to the suburbs and the quieter areas as our cities and the central areas started to shut down with the virus and curbing social interactions and meetings. And there's tons of articles coming out on the suburbs and the smaller cities. For example, this one by CTV News talking about Brantford. If you don't know where that is, I'm not surprised. It's about 110 kilometers southwest of Toronto, or Toronto proper. And the article says as of July, the prices in the last 12 months have gone up 40%. That's much higher than Toronto, the city itself, by the way. and that brings the Brantford average prices to $777,000. And this is a detached home, and they compare it to Toronto, the center city, and they say, well, there it's 1.7 million. So in relative terms, you're getting $1 million discount. And this once again comes back to the point of demand and price. We see the demand spreading to areas where prices were previously lower. Well, at least lower than Toronto, the city center. And once again, you have COVID-19 to blame for these factors in these small towns and some of these vacation areas really catching on fire. The third point I want to make is that, the demand is not consistent for all types of real estate. As I mentioned in the previous example, it's about detached homes, whereas condos really haven't been that hot, and condos in the city center have kind of gone cold or even struggled to go up in price in the last 12 months, or at least during 2021. And this is because of people, relocating, moving out of the city center, etc., etc. So a lot of the crazy numbers you see are being driven in some respects by, if they're showing you aggregate data, by smaller cities and suburbs outside the Toronto core. A lot of it is being driven by the bungalows and the detached homes, as opposed to more dense ways of living. But just looking at aggregate data, as BlockTO tells us, year over year, 12-month change, Toronto has gone ballistic on average. It has experienced a higher annual percentage change in real estate prices than cities like Shanghai, Seoul, Miami, Moscow, Los Angeles, San Fran, Vancouver, and basically anybody else really. So it is fair to say that the Canadian market, and in particular the Toronto market, has really caught on fire. And obviously these things on the ground can change quickly, so we don't know what the future will hold. Also, a fourth reason is that, you look at how much emphasis politicians put on home ownership and home prices, not only because it's rising, but it's a system that has to be sustained. And I say that because 2/3 or a little bit more than 2/3 of all Canadians or Canadian families or households own their home. So it's in their interest to, have that equity or have that ownership. Like the US experienced in 07-08, they start losing that equity, they start losing their homes, it would create sort of systemic destruction. Coming back to the point about how the system sort of incentivizes and really hypes up, the merit of ownership, the merit of it as a way to build wealth. Even though if you watch any of my money talks or financial videos, I make it clear that your principal residence or the home you buy, it really isn't an investment, it's more an expense. But regardless, that's not the narrative or discourse you see pushed around, and these things are sort of cyclical, self-fulfilling prophecies where you go to the dinner party, you hear about, your uncle who made so much money in real estate, and you're like, wow, maybe I should be doing that too, it's such easy money. And the result, as you can see from this article, is that you have many people who end up owning 2 or 3 homes who have the means to do so. And this has become easier with a lot more middle class and higher income individuals and families having much higher saving rates during the pandemic. So their expenses really went down. The expenses from having to travel, having to pay for childcare, all those expenses really got reduced. So they had much more savings. And seeing everybody else making a boatload or truckload of money in real estate around them, what did they do? They went and refinanced or cash out, refi, and bought a second property or a third property. A relatively recent report shows that more than 10% of Canadians own at least a second home, and this share is higher in Greater Montreal area and Greater Toronto area and the Greater Vancouver areas, around 12, 13, and 14% respectively. And in most cases, these people then buy, straight up cash their second or third home. There's only very few super wealthy people like that. What they did is, as this survey finds, most of them, actually about 1/5 in Montreal, and in some places almost around a half in Toronto and Vancouver, used equity from their primary residence, so the place they live, in order to purchase the second or third property. So basically they became dragged into this cycle and they became sort of, investors or speculators, whatever they choose to be. And this brings me to sort of my fifth point, and this is on the supply side. So when you have people speculating and buying, snatching up properties because tomorrow the price is just going to jump and it's going to be worth more than what you paid yesterday, supply starts drying up. And if you read any of these headlines, they'll tell you there is a supply crunch in Toronto real estate. There is a supply crunch in other Canadian cities as well, where houses are not coming on the market. And why is that? Well, it's a self-fulfilling cycle of inflation where prices go up, people hold on to it who own that asset or item or whatever whose prices is going up, supply shrinks and prices keep going up even more. And it's a very deadly inflation spiral that we could be seeing here in real estate. And there is no easy solution or fix for it, unfortunately. The other big issue, number 6, a lot of people often, gloss over or don't talk about is how much of Canada people really don't want to live in. It's a big cold country. A lot of these immigrants, they don't want to go to the smaller towns and live there because there aren't people who sound or look like them. There aren't particular grocery stores or services that cater to their needs, so why should they? So, they come straight to the Greater Toronto area where, they can meet their own type of peoples. And it becomes a cycle where a very high number of people become concentrated in the same areas. And then add on to that many protection, environmental green space protection that make it hard for homes to be built, many other sort of red tape and around construction and what can be built, a little bit of NIMBYism, which is not in my backyard, and construction projects being blocked all the time. And you get a serious sort of cocktail of supply issues and housing stock never being built. That's why this election you might hear a lot of promises by politicians to build, 1 million homes over the next 10 years. While this sounds amazing on paper, how practical it is to roll out that many homes across Canada in the next XYZ years is questionable. And as I said, the supply constraints, the systemic issues that create these supply constraints won't go away easily overnight. Most of Canada its population lives on the very southern tip, only a few dozen kilometers from the water. If you've ever looked at a map of Canada, you'll see that population density starts to decline very fast the further up north you go from the water and the border with the United States. And this is of course by design, and this is not something that is going to change anytime soon. Rather, from the city center you might see people venture a little bit further east or west or north or whatever because they can work from home or they can do other things from not being based in the city center like before. But in terms of moving massive numbers of people out into smaller towns out of the city center such as Toronto and the Greater Toronto areas where it's hard to get any sort of detached properties under $1 million something, that is very unlikely to happen. So yes, it's very complicated and it will remain a hot topic, and really it's in no one's interest to have a full-out crash unless obviously you don't own and you're looking to buy. Those are the only people who might be praying for a crash. But obviously it'll take down the economy with it. You might, even if you're praying for a crash, you don't want the outcome to be you losing your job and livelihood as a result. So it is a very fine balancing act of, markets and supply and demand. And for sure, Toronto in 2021 and post-pandemic era has really got itself in a sticky situation. So has the Canadian real estate market on average, as we see many of these periphery cities, smaller cities and towns go ballistic as well when it comes to real estate prices. Or instead of a whole-out crash or a popping of the bubble, we might see more regional changes like we have been noticing in downtown condos where prices stabilize or even start to decline slowly, and other areas such as your detached home out in the suburbs, somewhere quiet, continue to increase. Or it might just reverse, who knows, if the pandemic goes away quickly, which is probably not likely right now. So there you have it, YouTube. Now you know a little bit more about the real estate market some of the supply and demand issues that are plaguing Toronto, the Greater Toronto area, that is plaguing Canada and many of its housing real estate markets. As always, this is a friendly reminder to smash the subscribe button, hit the thumbs up. This is Tahmid. I'll check you in the next video.